too far, will you? I'm not good on the technicals.
Yeah. Okay, I'm putting us on live stream now.
Okay, thanks.
Okay.
Well, hello everybody, and welcome to Trader Talk Radio, coming to you presented by Actions to Wealth. Thank you for joining us, and great to have you along, whether you are YouTubing, Zooming, or Facebooking. My name's Ainslie Club, and I'm your host this evening. We've got a few away from the team, but we've still got a great lineup, and we hope we will have Alexis Ho delivering fundamentals. Ash Bull will be joining us with his outlook on the FTSE and other things he's looking at. We've got Shukri on cryptos and Lloyd on index analysis, and we'll see how we go from there. So, okay, let's just have a quick wrap on what has happened in the week that's just gone. It's been coming into the US elections. We've had a real we've had an interesting time. So a lot of the markets have just ranged, not gone very far, and then turned around and come back again. So that's made trading really in a tight range. And I guess until we see the elections pan out on the 3rd of November, where it's going to be an interesting time for us. But one of the major things that happened during the week was China GDP came out, and they're just going from strength to strength at the moment. So what we did have was China GDP up for the second quarter since post-COVID analysis, post-COVID. And when they went up to 4.9%, they missed target of 5.2, but regardless, they're up in primary and secondary industries and services and the services sector. Their exports got an extra boost as well, with rising global demand on medical supplies and work from home technology and things like that. So that's really helped them along. On the domestic front, the Chinese government has really supported the economy with more fiscal spending, tax relief, cuts in lending rates, and banks' reserve requirements. So all in all, China's looking really, really strong. But unfortunately, all of that has not really helped at all. It's been all overshadowed by the US elections and the pending elections and what's going to happen there. So, am I showing my screen? Thanks, Mike. Yeah, you know I'm not really good on this kind of stuff, but I'm just waiting for Alexis. We're just going to swap over to Alexis when she's ready, with her screen. So, yeah, sorry about that. We've just got a bit of a blank screen there, but we're just going to try and sort out Alexis with her screen sharing powers. If Mike can get onto that, please. So that's a quick wrap of what has happened in the market this week. What we're looking for, or what's going to happen this week, is going to be very interesting. We're coming into the end of the week, end of October, end of month, and there we go. There's Alexis's screen, and I've just summarized everything that you're about to talk about there, Lexi. I'm really sorry.
It's fine. It's fine. You've done a lot for me. We can move on.
Yeah, I just want to point out there's been a daylight savings shift, guys, as well. So just have a look on a daylight savings shift for the European market and the UK market. So London Open, just be careful of your times. If you've been used to a certain time, just double check that on, I don't know, iPhone World Clock or X Factory. But light on with major news. It's just that we've got an election coming up. Lexi, what have you got with the fundamentals?
Well, I've got some interesting stuff regarding, as usual, we are talking about China, but I think the funny thing is China's figures are actually giving the Aussies a boost, right? So we had nice, if you just look at the indexes over the side, we had nice Aussie numbers last week. Started a little bit shaky, but the Aussies really started moving midweek. And if China continues, I think there's going to be a lot more confidence in the Aussie. Also because Aussies, I think previously they were at certain probably technical levels that really allow it to kind of start to shift. So let me just pull up where's the charts? All right. So if we look at, I'm just going to go to Aussie dollar. This is on let me just go to a daily time frame. All right, so the technical levels are there, but I think the China really did help the pop last week, and it really does look nice and bullish on the Aussie dollar. I'm looking for more strength in the Aussie. Aussie Kiwi a little bit slow to start, but we have Aussie Yen already starting to move, so it's quite exciting because if this kind of follows in tandem with the China market giving it a little push, we could be seeing the start of a new trend change. And if this potentially can be a change of so-called direction, and if we are able to find the technical levels to enter in, it will be a nice ride to at least the next the next highs and the next previous highs and the next levels, and it gives us a nice move up. And then that will be yeah. We've been we've been in the range for so long.
It has. All the markets have been ranging. It's been a bit tough going, especially if you're a trend trader.
Yes, definitely.
Not been fun. But yes, the Chinese was out. I think they came out on Tuesday. It certainly gave us a bit of a push along because we are so heavily influenced by the China market. Yeah, and they've done really, really well. COVID's looking like a bit of a blimp in the rearview mirror, whereas a lot of the other economies, like the European economy, they're all staying. In the UK, the US have got a couple of things really they're trying to juggle there. But yeah, China's done well this week for the second quarter. Not quite what they wanted, but everything else is strengthening.
Yeah, which is quite cool because I think if usually after situations like these where this is probably a deep, I wouldn't say a recession, but it's a deeper, more protracted slowdown of all economies due to the borders closing. So it really is a scramble to the countries who can start to link up its borders again slowly, right? So we already have, for example, Singapore with Germany has just started opening its business channels, so-called. So they are allowing slightly more lenient flights from Singapore to Germany. And the interesting thing is I am looking for Asian market recovery. And, while most, I would say the Euro US markets are still having negative postings of quarterly GDP. It is starting to be exciting for me because Singapore has its first green. So we have posted a 7.9% so-called recovery from previously. So in terms of domestic demand, I am looking for probably a Singapore market as an indicator for its neighbors, for our close neighbors, to see whether we can get the Asian currencies up, and hopefully Australia being so close to us, will follow suit. Together with its strong ties to the Asian market as well as to China, right? So with that, we can also look at the nearer countries towards the Southeast Asian side. So that would be Australia, New Zealand. I feel that these countries have a chance of recovering a little bit faster than the Euro, US, UK market because they're a little bit further. The borders, the country's a lot bigger. The borders are not as and COVID is not as tightly controlled as as the rest of the countries on the other end of the globe. Yeah. So with that, which is it probably is going to be a pretty interesting time to watch currencies like dollar Sing, Aussie dollar, or even the Aussie-based currency, the Kiwi-based currency. So these are the three currencies moving forward as economies scramble to open borders. We're going to see whether they can get the COVID numbers controlled, get their safety measures in place, and the moment the border starts to loosen more and more, we would probably see a slow, steady strength in their currencies over a medium to long-term period of time. So we are entering the phase of who can recover faster, and the China market has already taken its big step forward. With a nice positive 2.7% Q on Q, 4.9% year on year, and as China being number 2 in the GDP ranks, right? When one big giant moves forward, the rest of us little ones will have some room to catch up. So this is interesting to watch, to see the so-called race to recovery.
Yeah, interesting. Yeah, the results have been really good out of China last week. Like I said, there was a bit of a bump, but nothing unfortunately substantial. So yeah, with the Aussie dollar. I know you've been following the Aussie dollar. Is there anything else that you've been really keeping an eye on there?
The Aussies, actually I've been following the Aussies, the Kiwis, and of course the little dollar Sing over here. So again, it's interesting because the Sing dollar is a very regulated currency, which is why its recovery is going to be a little bit different because, for example, 1.35, as I kind of mentioned before, it is kind of the bottom range where I think the Singapore government will allow the currency will go to. As you can see that this 1.35 period area is some, I think it's a level that they're keeping watch. If there's no if there's no big shifts in the market, this level is the lowest that the Singapore government or the MAS, our regulatory authority, will kind of allow the currency to go to. So, and of course, being Singaporeans, we like to control everything. We have a very nice, we have a very nice range. So because the Singapore government is, they like to control everything. It's starting to get, it's a little bit easier to trade because we know at certain levels, it's not going to stay there for too long. The government will step in behind the scenes. They're not going to announce it, but they will step in to kind of, do some adjustments in their global currency portfolio to at least keep the US dollar competitive to trade, competitive to its import and export. So it's already touching or testing this 1.35 level over here. I am waiting for moves for a stronger dollar, weaker Sing. And it's not so much as to US side policies, it's more to Singapore side policies, because we do know the Singapore government does interfere a lot in our lives, right? So this is a level I'm interested to see whether we can get a conclusive bounce and probably head up to a nice medium 1.4. To keep its currencies competitive, to not let the Sing dollar weaken too much, but again not allowing it to get too strong. So we are looking at local Singapore dollar currencies. You can see the Singapore currency actually travels in tight ranges, depending on whether there's a crisis or not. It will move to a certain range and try to stay there for a while. So you can see a lot of government intervention in the currency over here. Yeah, this was when things were recovery after post 2008 financial crisis, trying to control it. And I think this is the window between 2015 to 2021. You can see this is the window I think the governments will feel most comfortable at. So I am looking for longs on dollar Sing, really based on how the understanding of the Singapore government does like to dabble. So this is the potential on a monthly chart. Let me go to the daily chart. Where's the daily? Okay, so I'm just going to go weekly first to have a quick peek. So I'm going to zoom out and you can see that, pending big moves, they always try to come up to a minimum of like 1.35. And the moment it hits too high, something's going to happen and they're going to help to, shift it into this medium range. So we're at 1 point, this is a daily time frame. You can see 1.35 multiple tests. It's really hard to get the currency down below. It's probably some big news and all that where the government can't quite control it, but this is a nice sweet spot, 1.35. So I am expecting for longs. It is already starting to test it really aggressively over since September all the way to November. It's tested it 4 times on the daily time frame. So I really think the probability to the upside is a lot higher than the probability to the downside over here. So
popular
this is
level there, Alexis.
Very popular level.
1.35.
Yeah, it's a very popular level.
Government intervention there, no doubt.
Yeah, very clear.
Yeah, it's a very, and that zone just below where exactly that secondary zone where they allow it to go to, I don't know, is that humoring the market and letting them?
Yeah, it's about 1.34.5, like 50 cents lower than the other 1.35. I mean, they probably either undershoot or overshoot something over here. Yeah, so on the shorter time frames, definitely I'm looking for a change in trend over here. You can see this is it's been consolidating here for the entire half of October. The price is just trying to figure out whether or not it's got enough room to move. It's probably influenced by the US dollars itself, but government intervention is there trying to hold this level steady. So I think the moment we see any concrete once there's a concrete election result in the US, which means about beginning November, we are going to see the Sing dollar pick a direction and just go. Once the news is up and over, and there is a clearer direction on who won, Trump or Biden, it doesn't matter. But I think first week of November, it will be a clear sign the price will either, the price of this will either, where's my yellow pen, will either start to cycle back up, or it will dip back down, depending on the knee-jerk reaction, and then the government will intervene and it should try to, start to do this again. Regardless of what happened, I believe that it is an up, and this is due to the government intervention. They don't really want the US Sing to go down here. So it just as a matter of when and how. So it's either I think if Trump wins, it's going to go like that. I think if Biden wins, it's going to go like that, something like, I think so. So this is my assessment based on largely on the Singapore government's level of intervention.
Yeah, until you actually pointed it out, I didn't realize there was that level of intervention. I mean, it's no secret that central banks and governments will manipulate their currency to their policies. But when you pull it like that and just say, look, they don't like it here and they like it here, and it's pretty clear, isn't it?
Yeah, it is like I think like what you said, humoring the market. They probably allowed it to go to the 1 point. I think it's really almost a 134.5 level, right? It's a very neat. If I pull back the 1.34.5, that's the Ainslie eyes that spotted it out. You can see it went away all the way back 2017. It's there, over here also a bit of undershoot, overshoot, but this is like it's such a nice area over here where you can see that the policymakers at the government side is probably looking, hey, you're not doing your job, guys, you need to keep it up, and then everybody starts working to get it back up.
We're getting expensive.
We're getting expensive. No one wants to come to Singapore for its tourism. You better do something about it.
Although we hope to get there. Our travel bubbles are looking pretty good. It was announced in Australia for a travel bubble for Australia with Singapore, Japan, South Korea, Taipei, New Zealand, and some of the Pacific Islands.
Yeah, that's really awesome.
So that's looking really good and looking soon. So, on the home front, we'd actually like for some of our borders to open, but that's looking like it'll happen before Christmas anyway.
Yeah.
So that's good. But yeah, missed coming up to Singapore. I really do.
We miss you
Yeah.
guys.
Yeah, look, I think we're all climbing the wall a little bit, but it's looking like a bit of blue sky on the horizon, which is really good. And as you said, that all sort of feeds into the building up of an economy and the economy getting back on its track, because a lot of these economies rely really heavily on tourism.
Yeah, that's it. That's right.
It's to get it started. Whereas you're looking at, those European countries, apart from the fact it's going into winter, they're going back into lockdown now. So it's really unfortunate. But yeah, no, that looks looks really. Not something that $4 not something I normally trade. But you're onto the pound Aussie.
Yeah, so I was looking at the pound Aussie, and actually, it's just really a reactionary trade in terms of the volatility in the pound against a stronger Aussie dollar. So, what I am looking for next week is continued strength of the Aussies. Of course, the levels of dollar sync I've already shared, but I am looking to trade the stronger Aussie against whatever I have, because I think the Aussie has. The Aussie, in terms of its, let me just go to the Australian side. I think the Aussies, in terms of its so-called numbers plus COVID and all that, I think the unemployment numbers are keeping pretty controlled post COVID. And what I'm doing is comparatively to the other economies, I think the Aussie has a good chance of getting it back up on its feet a little bit faster. And also,
Yeah.
the Aussie has had a difficult 2019, 2020. It doesn't just have to deal with COVID. It had to deal with forest fires. It had to deal with China trade war. So I think the Aussie has been down for a while, but they're definitely not out. So I think it's they're going to get back up again on your end of the world. So I am looking for Aussie boosts. Yeah.
We just hope that there's been a few strained relations between Australia and China over the last couple of weeks, and we're just hoping those issues will resolve and they will go back to buying Australian coal and iron ore and a few bits and pieces. Yeah. So they were going to stop doing, because obviously, being a resource-rich nation, we really rely on those trades to keep going. So yeah, hopefully, and nothing's in writing. It's just been apparently a verbal issue by the Chinese government to pull back on Australian resources. But let's see how that goes. And if that's the case, yeah, you can see the Aussie dollar just strengthening a bit through this time because of China doing so well.
Yeah, and I think I think it's really a political game on right now, because Australia has always had, it's really a political game, because Australia always had good relations with China until Trump started its rubbish. And then I'm sure it's a little bit difficult, like, who do you follow, the big boss or the slightly smaller boss, that kind of thing. So I think Australia has had to be really smart in playing the political game, giving a little bit of face, so-called, to China, giving a little bit of face to Trump. They're really trying to wait it out and see who wins, because I think if Trump loses, the Australian dollar will just say, okay, fuck Trump, let's just go with China, and just everything will go back up.
Yeah, and it's a matter
pardon
of
the French. Yeah,
and we certainly have having to juggle one of our strongest allies, complete with juggling
where the money comes from.
Yeah, do not bite hand that feeds us. And I guess this where is that a couple of weeks ago we were talking about it. We got into a bit of trouble because we just sort of said to China, well, hang on, explain what happened. How did this coronavirus start in the first place? Yeah. And I think I said at the time we were, hitting above our weight, but yeah, we all move on. But yeah, interesting week ahead there. Well, Alexis, yes. Anything else apart from the strength of the Aussie dollar and looking on a retracement on a bit of a rally on the US Sing dollar?
Yeah, no, that's all for me. I mean, moving on, I think it's just a trade with a little bit of risk management. Should be quite tight because we have the elections, we have the Brexit. Yeah. So the Euro, the UK, and the US is going to have a lot of movement. So depending on what strategy you trade, I'll say good luck, guys. I'm sure Geoff will be really happy though.
Geoff, yeah, Geoff won't be joining us, but he sent through his charts and he's given me the whole rundown on what he's doing and how he's going about it and what he's looking at. So You're both on the same page.
Yes, awesome.
Which is great. Thanks, Alexis,
Thank
and have a
you.
good week.
You
And
too.
coming up is our man of the time is Shukri on cryptos. Hi, Shukri. How are you?
Hi, I'm on the moon now. See that background?
You're on the moon. Is that your bank account? Bank account's taking you there, huh? With all your crypto trading.
Yeah, it's exploded this week, just as we expected it, but went up higher. But yeah, these are very testing times, so don't get carried away with this explosion. We have Trump coming up. That is like the last cycle. So I think the mission that I told in my class is we have to circumvent this man called Trump. Because if he wins, it's okay. But what if he wins or lose doesn't matter. But what if it becomes a contested election? We got a problem.
Contested. Is that contested because he doesn't actually really want to leave the White House? Or is that because there's something wrong with the postal votes, or there's something wrong with this, that, or the next thing as far as he's concerned?
This is why Trump, being Trump, can bring out anything. You know, he's
not a good loser, is it? It's just,
no, he's not.
Already preempted a loss. And,
Did you see the debate with Biden? Now, here's what I saw with the debate with Biden. He was childish. But this is the other thing I saw. You know, I was looking at all the likes and stuff, because that's how we predicted that this old government in Malaysia lost last time, right? When I saw the likes, when Trump was speaking, there were more likes and love than Biden.
Yeah.
That's like, hey, what's going on, guys? I thought Biden was leading the polls. Okay.
Which poll? I mean, because he is meant to be leading the polls. 51 to 41 I saw on Friday.
Yeah.
But it's like anything, isn't it? It's just like you don't know what to follow, you don't know what to expect.
Yeah. But on this Tuesday, I think there is the Trafalgar poll, which was accurate in 2016. The most accurate. So I'll be looking at that on Tuesday or Wednesday. That would give a really good a really good way for us to see if Trump wins, because it will have an impact on Bitcoin. Long term, no problem on cryptos. Short term, if Biden wins, good for the EU, bad for the US dollar, good for cryptos. If Trump wins, the US dollar is expected to go up before again going down when they have all this stimulus again, right? Because he has to give more stimulus. So, you know, it's what's happened now is I think the crypto market, we're on drugs, you know, we're like totally on drugs now.
You're on drugs.
And let me show you the drugs now, okay? And I have a new methodology today, which I'll give it a name afterwards. So, you know, so you look at this, we've just gone above 400 just now, it's 394. Bitcoin broke 13,000 just now. This is so critical. And I did a recording for the class on what to look for next week, and you know, it was invalidated anyway. So again, here we already broke this. This is the weekly chart. Our next place is actually here 13.9, right? This is around 13.9. Yeah, this is the next resistance level there. And where does Bitcoin go next? Well, this is the new methodology that we found out thanks to Paul Bottrell. So what did Paul say? See, the thing about Bitcoin, if you want to know where the support, the easiest way, you look at the CME gap. This gap happens because the CME, which is the futures in the US, does not have weekend trading. The rest of the exchanges have weekend trading. So, you know, even during the weekends, you know, we're very busy trading. So this is the gap. It didn't hit the gap, but if you remember, Paul said, no, I consider that hitting the gap. It'll go up. It did. It did. Right. And then I asked in the group again, if you remember, Paul, it like didn't hit the gap again. It just
missed by $30, didn't it?
Yeah, correct. And it went up again. So here it is, guys. This is the new methodology. When Paul comes, we'll tell him, we'll call this the Paul Bottrell gap, which is not a real gap, okay? It didn't really close, but we can consider it closed. So guys, remember this PB gap, okay? When it's near there and it's almost there and it doesn't quite do it, well, it's considered closed. And this is where the support level is. So what you can...
So honored.
Yeah, I know. And what we have here, Ainslie, look at this. This is like 13 now. This is before the weekend, obviously. So during the weekend, it actually went up, okay? This is here, and this is the weekend here. And we just have to look at the gap again, because if I change this to the daily chart here, let's look here. Yeah, it went up like that, 13.4. So if we are going to adjust back to the gap again on Monday, and where's the support? I think I already hit the support, already went back down. So I was like busy making a recording. Okay, if you miss Bitcoin, then you can buy it there. Of course, it's not true anymore. No, it came back and filled up the gap. So it's already filled up the gap. So now it may be ready to go up, but just know that that level is very strong. That was the high in 2019. It may turn, and that's good. So I hope that it turns around at 13.9, comes back, give us another chance. Hopefully, if Trump stays, I'm fine. Then really should go for it. Hopefully, there's a lot of volatility in between for us to get in. If not, it should come back down. If Trump, if Trump causes problems, it should come back down, and we can get in again. If Biden wins during the volatility, you'll have to get in because the US dollar is expected to tank. This is expected to go up. And look at Ethereum, same thing. I think during last week's show, right, I said I expected it to go to 413. Bingo, went to 418, just there. It's just you know what you guys do every week, just draw that key level, just draw that long horizontal line. It comes back. And why does this come back? It doesn't come back for all cryptos, okay? Guys and gals, it only comes back for the one with big capitalization like Bitcoin, say the top 20. It will respect those levels. In fact, it respects it very well. The only thing is, Ainslie, and this is what I want to show, which is why when we do crypto trading, I even have to tell people, hey guys, there are two types of trade. The first trade is where we're trading, we're looking for profit, and then we get out. The next type of trade is where we just go in and buy a little bit, and it goes down, it buys some more, because I was buying Ethereum between 385 and 340 here, right? So my average was 360, but I had to wait through it because eventually it did go up. Okay, so that's the thing. When you are buying and you are collecting, it's like a stock, when it goes down, you buy some more. When it goes down, you buy some more. You have to really tell yourself, okay, this is not a trade. There's no stop loss here because the trend is up. I am going to put this Ethereum to work. I have to wait. Now, of course, if you're in a trade, you buy at 385 and it goes down to 339, you'd be out. I always put my crypto losses around 5%. So, 5 to 10, that's it. So again, be careful of this. You need to know what you're trading. Now, I'll show you what really, really, really sent this to the moon today. It was our good friend PayPal, because they have decided to allow Bitcoin, Ethereum, Litecoin, and Bitcoin Cash to be used on the PayPal network. But this is different, okay, guys? This is not what you think it is, but it's still so big. In fact, PayPal, announced some more news that day. This means that here you can buy Bitcoin, okay? You guys can buy Bitcoin and you can buy Ethereum and all that on PayPal, but you can't send it to me. You can't do that. You have to use it within the PayPal network. That means if you think Bitcoin or Ethereum are going up, you buy, it goes up, you get to buy more stuff. And that stuff, and when you convert it to fiat, okay, then you can send it around. So, but when you talk about 365 million users now of PayPal, and I think most of them are thinking, Ainslie, of protecting themselves against the US dollar, I mean, I just don't know why it keeps going down. I really don't know. I'm puzzled. Okay, I'm like Geoff on the US dollar. I don't even know what to say. I'm just happy that this is going up. This is a big shot in the arm for Bitcoin. And after that, you don't see it here, but PayPal, and this is more exciting, has announced that they are buying companies related to crypto. They're buying crypto companies. Yes, they announced the first one. So this is interesting. So this makes it even more exciting, because if we can find what PayPal is buying or what they're going to buy, guess what? These things can really, really explode. So the game has changed, Ainslie. You see, what you see is before this, institutionals didn't come in. Now they're in, okay? You see, like before this, it was like MicroStrategy, right? Bought 450 million worth of Bitcoin. And then you saw Jack Dorsey's company bought 50 million worth of Bitcoin. In fact, but of course, institutionals do it different than us. They buy through ETFs, and there's something called grayscale because they don't know all these wallets, right? But Geoff knows the wallets, so yeah.
So what you're saying is there's starting to become a bit more of a commercialization around like this whole Bitcoin, almost a gentrification, if you like.
Yes, it's not the bad boy anymore that it was 2 years ago. Remember, like,
Yeah, I mean, I remember in Australia a couple of years ago, if you had been buying or selling Bitcoin through one of the four banks, or through one of your four bank accounts, Westpac, NAB, National Australia Bank, Commonwealth Bank, or ANZ, they'd actually freeze your bank account because they consider Bitcoin a legitimate currency or a legitimate financial asset for you to be trading. And now we seem to be going through this whole gentrification, and it's starting to follow levels and all the rest of it. It's quite fascinating how it's actually evolved.
It is. And let me tell you, when I was trading in 2017, you know what my worst worry was? That one day all the governments would ban it and I couldn't pull it out.
Yeah, well, we went close here. So it's really interesting.
And
so
now you have Grayscale saying that they have 7 billion in Bitcoin.
Big numbers, aren't they?
Institutional numbers. Institutions.
They are big numbers, Shukri. So coming back to the election this week, how do you think it's going to pan out? I mean, I love that you've given us three options. One is Trump will win and it'll all be okay. Trump will lose and cause a problem, or Biden will win.
I've looked at two
three.
videos. I've looked at two videos. One was with, Ash subscribes to this, so I just went in and looked at it. Markets made clear, said the charts are showing that Trump will win.
Yeah, I saw that.
Yeah. Another person that I follow, which is Larry Williams.
Yes,
and
he's a great trader.
The king of commodities. He said that if the market goes up during a re-election year, the incumbent will win.
Yeah, sitting president.
President. And what he said, that if the incumbent loses, it's actually bad for the market.
Yeah.
But
it's a very unusual situation, wouldn't you agree?
Very unusual. Now look at this. Now this is what he said, and I think we saw this during the Obama. So I'm sorry, I got these numbers wrong, guys, during the US show. If the incumbent wins, average, the market will go bullish is 84 months. I thought it was 84 days. Like, no wonder after 2000, whatever it was when Obama went, we had that big bull run on the S&P. So you're talking like, wow, that's a lot. Another 5 years before the next election. Go Trump. Go. I don't like Trump, okay, but hey, I don't mind if he wins. So I have mixed.
As long as I mean, he is going to be the leader of the most powerful country and the reserve currency.
Yes.
Got to be careful.
Got to be careful.
But, yeah.
And one more thing, guys. Okay, if you look at this, again, we always go through this every week, right? You look at the, this is where the opportunity for the smaller cryptos are, okay, which you really can't trust the charts. So it requires more magic.
That's handy. That's really good.
Yeah, look at this, right? 61% dominance. And I said that once this goes to 57, that means the Bitcoin dominance goes down, the other cryptos will go down. So this is the opportunity. If you're in small cryptos, they haven't gone up yet. They hit resistance here. So although the entire market cap has gone up, it's because of Bitcoin and the bigger coins like Ethereum. Now, once the small guys go up here, no, you're going to party like 1999. Not yet. Don't
we're partying like it's 2019. Now we know that what was coming down the train tracks at us. Okay. Shukri. And that's it for you for today?
Yeah, that's it for me today. Thanks.
Great. Because we've got Ash in the wings now that he's got over the... Hi, Ash.
Hello.
So there's been, we were just mentioning earlier that there's a time shift.
Yeah. So my clocks have gone back an hour and you guys have changed the time. So it's all got really confusing for me. Yeah. So it's now 8:30. No, it's actually about 9 o'clock here now. But I was scheduled. I thought we were having the other chat at 8:30. We were going to start this about 9:15. So I'm an hour out of schedule at the minute.
That's okay, but you're looking good. I haven't seen you for ages.
No, it's been a while, isn't it? It's been a while since I've managed to get into this actually. So it is quite nice to get involved on the Sunday. It's quite nice to prepare properly for next week.
Yeah, it's an important time, the markets are closed, and it's one of those funny weeks with election following Tuesday. But
Yeah, do you know,
tell me, what have you been looking at?
well, the thing that I'm the most interested now in is the Nasdaq, and I'll show you what's going on with the Nasdaq. I mean, I'm always interested in the FTSE, of course. Now, the FTSE, I think it may well strengthen. The problem the FTSE's continuously got is Brexit. Is it on? Is it off? Is it on? And Brendan, we had last week an announcement that they'd made a breakthrough, so the pound did strengthen up, and I've been looking specifically at the euro pound, and the pound did strengthen against the euro. So this is the euro first, and it was a big move to the downside. But while we're in the US show, I was saying to the guys, there's a buying opportunity down here, and the reason there was a buying opportunity is that there was no deal done. And the continued speculation just kind of like it constantly fuels this stuff, where it just bounces up and down and up and down. And if we look at this on a daily chart, then you can see that there is a pretty strong support line here, and this is where we ended up. We ended up right down at the support line, but the market, it's strengthened all the way back up again, and it kind of puts us in a bit of a strange area, because it looks like, if we were sort of like drawing trend lines, and it's going to be dependent on where we are, but it looks like we are on top of the previous trend line as well. This looks like a false break, and if we were thinking about this on slingshot territory, then it looks like a false break and a move to the downside and a retest. So it does suggest, if we're looking at on a daily chart, anything under this level now, if it breaks, is probably going to give us a pretty good move to the downside again, down to this point here. So I'm going to be looking for opportunities to short the euro pound, because again, the deal was on, but then it was kind of off again. But I think it's going to ultimately be on. Even though we have got the most maverick prime minister, possibly, certainly in my lifetime, but possibly in history, I still don't think that he's going to commit economic suicide, and it really would be economic suicide if they don't get a deal with the EU. There's too much trade that goes from our country to that particular bloc to plug the gap with any other little trade deals they do with the likes of Japan, which they did over the weekend. So
she's working hard, that minister, isn't she?
Liz Truss. Yeah. She's working hard, and she's done a good job.
She's working really hard.
She's done a good job, but it still won't plug the gap. When we kind of like recognise that 45% of the UK's GDP is really kind of generated through the European Union, it's going to take years to kind of replace that particular deal. So they need a deal. There's no doubt about it. The problem seems to be about fisheries, and the biggest sticking point is France, because France share that kind of that block of water between the two countries. So France and Macron are playing hardball, and I think the rest of the EU are trying to placate him a little bit and say, look, just relax a bit, because if we don't get this deal done, then because of the fisheries, the whole thing could collapse. So I think that they're trying to placate him, but he's just not biting on it right now. So I think it is going to be down to France, and the UK and France have got a bit of a checkered history, so it could well be France that the kibosh. Yeah, well, I mean, it's obviously we've got a lot of our language from France, because we got invaded so often, and particularly William the Conqueror, who was pretty good at it. So yeah, we do have a checkered history, and it might kind of come back again to kind of rear its ugly head, but the political balance is too great, I think, in favor of doing a deal. Because if we think about what would happen if we didn't get the deal, firstly, the 45% of GDP would be affected. Now, obviously, that's not going to get down to zero. It just means that it's going to be probably substantially less. But also, we've got the problem with the UK getting broken up if there isn't some sort of deal done. So there's quite a lot in the balance here. So I'm looking for shorts in the euro pound. I think if we can get it early enough before it comes down here, and then the deal is done, then we should have a really good run right down to around about 0.8875, I would have thought. So looking for signals in this one. You can see that the last 4-hour bar just before we closed up was quite negative, but I don't really pay too much attention to Friday's bar in relation to Monday, because there's water goes under the bridge. There's 2 days where the market is shut down, and too much water goes under the bridge for us to be able to trust a bar like this without some further information. So I'll be waiting on the information to kind of come in with that one. But I am looking for shorts in the euro pound. I did draw a fib on it as well, just to see what if there was a Fibonacci level that we could start relying on, and it looks like it's just about holding between the 68.8 and the 50. So I suspect what we could look for is if the price action can get under this 50, and it will be a lot more significant than a fib. So if the price action comes down below the 50 and then comes back and retests the 50, and the 50 somewhere along this trend line and somewhere along this horizontal level, and there's a pivot here, I think this will be a sweet spot. So I'm looking at the minute. The trade for me is along there. Now I don't know if it's going to be on Monday. I don't know if it's going to be on Tuesday, Wednesday, Thursday, or Friday. But I'm looking for this particular price point, and that particular price point looks like it's around about the 0.9870. I would suggest. So it's somewhere in that level.
Yeah, a few ifs in. I just said you've got a few ifs in there when it comes back, and if it comes back up and touches the trend line, but at the moment, during the way everything's trading, that's the best we've got, isn't it? Really?
Yeah. Well, the thing with the euro pound is that there's always going to be ifs until the deal is finalised. So while it's still in the balance and while there's still a possibility of a deal, it's unlikely to break to the upside. While it's still in the balance and there's possibility of a no deal, it's unlikely to break to the downside. So we are really, if we think about this in the inverse, then this is downside for the pound. So I don't think it's going to go downside. I think that there's still a chance that there's a deal to be done, and I think the deal will be done. So if I can trade it in this area that there's a deal that could be done, and we come down, and then the deal is done, then we're going to go down a lot further on this particular currency pair. So I like the euro pound, and I'll be watching that closely. But as I said, I think the most interesting one when it comes down to indices at this particular stage is the Nasdaq. And if we do a quick comparison, this is the S&P, and it looks like, again, the S&P may well have, depending on where that trend line is, but it may well have just poked its head above here on the 4-hour, and possibly kind of creating what looks like it could be a bit of an accumulation pattern down here with this inverted head and shoulders. So it looks like that's the left shoulder, the head, and it looks like that's the right shoulder. Now there's certainly conflicting levels here. So it could be that we're trapped here, and the most sensible thing to do in this particular scenario would just be to wait for the break. There's no reason for us to trade here, but waiting for the break to the upside, coming back down and testing that level, and then possibly we could try and take a trade to the upside from that particular point, and it might be a broader pattern. But the key is that this is bashing its head to a potential move to the upside. Now, if we compare this to the Nasdaq, the Nasdaq looks a lot more negative in many respects. It hasn't really kind of created an accumulation pattern, and if anything, it looks like a potential selling opportunity here. This is really a lower level. Where we looked at the S&P and it's on the 4-hour chart, it looked like it was making a slightly higher level. This really has kind of gone through here and come back, and it's kind of like now it's bashing here, and it's on the trend line. So I think this one could fall. Now, the reason that I like the Nasdaq for some downside, even though it's not necessary that I would trade it, I may, but the reason that I'm a little bit more cautious about trading the Nasdaq short is that it is the strongest indice of the year. So do we want to get involved in fighting, really what is the longer term trend on this one? And obviously the longer term trend is a very, very powerful move to the upside. This is the weekly chart, and we only need to look at the monthly really to kind of corroborate that. In saying that, with moves of this kind of velocity and this kind of trajectory, they have got a greater chance of, if they do turn over, they come down, and they come down hard. And it's possible that we could see the NASDAQ back down to 9,000 again. It's possible. And the reason I think that that is actually a possibility now is not because of the chart, but because of the potential of a Biden win. Now, I completely accept the statistical aspect of the presidential, the incumbent tends to win if the stock market is up. Completely accept that, and you know, that's a proven statistic over time. But we know that statistics can get, you know, be wrong as well. So that's certainly what that does suggest right now. But I've been watching and I've been keeping up with quite a lot of these presidential debates, and I think this one's a lot closer. And if we consider what happened last time, Donald Trump did not win the popular vote, if you like. So he lost the popular vote, and yet because of the way that that U.S. politics is cut up, he ended up winning the overall vote. I think his impact on Hillary Clinton was greater than what his impact and the attacks that he's having against Biden, for two main reasons. Other things that were outside helped Donald Trump in his crooked Hillary label that he gave her. You know, he gave her the label crooked Hillary, and then all of a sudden they were investigating her was it the accounts? But they were certainly, I can't remember exactly what it was. Her email, that's right, her emails. Yeah. So there's an investigation going on now. That I don't think we can really sort of we can just brush over as something quite light. I think that really helped him, because he gave her this label, and all of a sudden, you know, she is. Or that, you know, that the Fed are almost proving the point that you know, there's something to be wary of with Hillary Clinton. Now, Donald Trump's
he is a spin doctor. He's a very clever, he's rat cunning.
He's very good at it. He's very good at it. Now, the Sleepy Joe tag, it doesn't really kind of stick quite as well, you know, because
Teflon-like.
He's a bit more, yeah. I mean, I watched it. Now, don't get me wrong. I don't really like Joe Biden. I think he's a bit of a snake. But we need Joe Biden, because if we don't have Joe Biden, then the environment could be destroyed beyond any help, in my belief. So I think we do need Joe Biden in power, because that's probably the biggest threat we've got for the next decade. But the main thing with him is that I've watched the presidential election debates, and the best way for Donald Trump's Sleepy Joe label to have stuck is if Biden did get caught up in those debates, and he didn't actually. He was fairly solid. You know, he wasn't particularly good, but he wasn't bad either. So I think it's going to be a much greater struggle for Donald Trump to win this one. Now, if that is the case, back to the NASDAQ, if that's the case, there are already talks of a Biden administration looking at the tech industry and possibly even kind of, you know, having competition, some sort of argument with the competition of the likes of Google and Apple and Facebook. And there's you know, there could be even some investigations going on to those guys with tax as well. We don't know, but I don't think Biden's going to be good specifically. Forget the rest of the indices, because he probably won't be great for those either. But I don't think Biden's going to be particularly good specifically for the NASDAQ. So I'm watching the NASDAQ. Now, it doesn't necessarily mean I'm going to take a selling opportunity yet, but I may have to, or we may have to, if that's what presents itself now. This might be the best possible price we're going to get, because if Biden gets in, by the time we know that information, the NASDAQ may be lower already. So it's the NASDAQ on the watch list for me. It may be to go short. I beg your pardon?
The euro pound to go short if we get a deal, and NASDAQ depending on who gets in.
Well, euro pound to go short actually now. When it comes down to the deal thing, I will rely on, because we are at a pretty good level with the euro pound. I think it's good value here, because I don't think it's going anywhere but down a bit from here. So if I can get a trade on, put my stops at break even, and then see if I can actually get a ride without it taking me out, then I will play it that way. But I think we have to be incredibly cautious. If we don't put those stops in place and play the euro pound with the acceptance that we may get taken out the trade and we may make nothing out of it, or very, very little out of it, then we could actually get run over in the opposite direction. So I don't think that would be a sensible thing to do. Yes, you could wait and see if there's an announcement of the deal, but I think it's going to move pretty sharpish. And in fact, I can show you that you know what that looks like. I was watching the euro pound quite closely last week, and I had a small trade on this one to the downside, and this happened while I was watching
Julian,
it. I beg your pardon?
Been waiting for that one. Julian has been looking for the euro pound to go short as well.
Yeah, well, I took a short here. I took a short here, and all of a sudden, the euro pound, and you know, I'm going to change the time frames. I know this is probably going to freak people out, but we're going to look at this on a minute chart, because this is how fast this thing moved, and the minute chart doesn't even really do it the proper justice. Can I find it? There, look at that. And I promise you, that didn't take a minute. That was seconds. So if we think that we are going to get an opportunity when the announcement is made, then we're kidding ourselves. We have to position ourselves sensibly to take a position on. If we think the direction is short, we're going to have to take a position and be sensible with the money, because it will go like that and it'll be gone by the time they come out and say the deal's been done. It's done. You know, we're over. So and as I say, the minute chart does not do it justice. This was seconds. I saw it just go from here down to there within no time at all. And I was just fortunate I was in the trade in the right direction, because the truth is an announcement could have come out and it could have gone that way. You know, I'm not patting myself on the back about that one. I just happened to pick I was lucky. That was a lucky trade for me. But the way that we can negate that luck a little bit is by making sure that we trade at the correct level, but making sure those stops are in the right place, and we don't over egg the pudding. We don't have to put a lot on this, because if it's going to go a long way. You know, this is a weekly chart, so we're looking at 200 and something pips to the downside, which is a big move for the pound, euro pound.
Yeah, for euro pound, that is. Okay, well, that's really interesting, because like I said, we've got a choppy week coming into the end of the month, but with everything else, with the other events, it's going to be interesting charts ahead.
Yeah, I agree with you on that as well. Yeah, as you say, not only the last week of the month, but the preceding week to the election as well. So it could be quite turbulent, and I don't think it's going to be a time to have a lot of positions on. I think just a few positions would be sensible. I am bullish the stock market, incidentally. You know, there's certainly a few opportunities out there that I really like. I like the travel sector, and there's a few, because of the Biden environmental thing. There's a few environmental stocks that I'm closely watching as well. So I think there are some quite nice opportunities, even if the market generally comes down. I think if we're sensible, we can probably pinpoint a few sectors that actually do quite well out of the next period, depending on who gets in, of course.
Right. I've got a couple of questions here for you, Ash, and they revolve around your and Geoff's Monday to Thursday shows regarding times. Could you just confirm that for your call them groupies, your followers, your attendees, because they just want to just double check the time with the daylight saving.
Yeah, well, it's going to be 5 to 4 Sing. Actually, we'll be starting at 5 to 4 Sing Monday to Thursday for the UK session.
Right.
And I don't know what we're effectively. I suppose we're just going an hour back. We're going an hour back because it's 9 o'clock here right now. The UK market opens up at 8 o'clock, and our show is designed and dictated by what happens with the UK market. So if we're going to be going back an hour, so we'll be 5 to 4 for the UK session, and then the US session will be 9. 9. No, be 8:30. 8:30 for the YouTube aspect, and then 9 o'clock for the US session. Sing time days. Yeah.
I hope everybody's happy with that.
Yeah.
Okay. Ash, thanks so much for joining us.
No problem.
And
No problem at all.
yeah, I hope that all comes through nicely for us.
Yeah. I mean, you know, this is the thing. It's if anybody is panicking about the trays they've got on or the trays that they're going to be entering, then my suggestion is that you're probably putting too much on. So just don't do it. You know, there's just no need. There's no need. We can take a little bite out of some of these. Yeah, exactly. Just, you know, ease yourself in. And this is the thing. If we put a light position on the euro pound, you know, enabling us to give us enough room, there might be an opportunity to add to it if we get that announcement. But it'll be a lot further down. But we'll be so covered by the first position that it won't matter. So we can still aggregate quite nicely.
Yeah. Okay. Thanks so much, Ash. I'm going to go, because I'm hosting at the moment, I will actually go to Lloyd if he is good to join us in the next couple of minutes. I'm not forgetting gold and oil, and I'm just going to go because I'm going to go. Geoff sent through some charts in his absence. He's not joining us this evening. It's a very important evening on the football calendar. It's grand.
Yeah, apparently so. Apparently so. Yeah, some sort of rugby thing.
You know, yeah, and he loves his rugby, so we can't actually, you know, you've got to give a man a bit of scope there. So, Lloyd, you're right to go there.
Ainsley, yep, I can. Let me grab the screen.
Hi. Thank you.
Right. So afternoon or evening, everybody. I'm always confused about what to grade during this timing. 5 p.m. Is it afternoon or is it still evening? Or is it? All right. So everybody. So my analysis from last week still didn't. I won't be deviating too much from it. By and large, most of the currencies are still moving according to what I hope they will be doing. Yeah. So I'm still pretty bullish about pound. So you can see that pound actually from last week actually broke up. Yeah, I did have this level prior beforehand. So I'm waiting patiently either Monday or Tuesday to see if there's a retest of this level. Then I'll put in another position for pound. So let's go long for pound. Now, CAD by and large, I'm bullish about it until, but price has limited space. Is really in the middle of this rangy situation. So it's in the mid. So it doesn't really have too much space to move up to $77. Yeah. So for CAD, personally for me, I would be putting in. I'll still be trading CAD, but probably at a lower time frame, seeing as it doesn't really have that much of a space to move up. So, but it is still worth trading. Euro, pretty similar situation as CAD. What's up, Ainsley?
I was just saying, I mean, when you're talking about trading things and it's got a little bit more to the upside, where would you put your stop there? So your risk reward would be looking healthy.
For CAD, well, let me see. CAD yen. So let's say for CAD Swiss, because I'm not talking about a specific currency, so I can't really tell you where the stops I'll be putting. But looking at my chart, if I'm pairing CAD, I'll be probably going with CAD Swiss. Yeah, because I'm quite bearish about Swiss at the moment. So let me jump into actual charts. Yeah. So this is what I have for CAD Swiss. Now, and in lieu of that, this is how I'll probably be looking at it. That if this is the case for CAD Swiss, since I'm so I'll be looking for a bounce off this level. Right. And then my stop will probably be somewhere below, probably at 0.685. Yeah, so this is what I'll be looking to trade.
Okay. So you take those those indices and then apply those to the appropriate.
To the chart, yes.
Or the most appropriate chart. Okay.
Yep. And euro, so pretty similar to CAD. Oh, sorry, I didn't quite catch you at the last one.
Sorry?
No, I thought you were saying something. I didn't quite catch you.
No, I'm just saying, I just like the way how you go from your index charts, your currency index charts, and apply it to the strongest position, and then that gives you a really nice risk reward that it did on the CAD Swiss.
Yeah, because I just find easier overall when I look at the currency indices, and at one glance, it does, at least from my own analysis, it tells me which one is the strongest and weakest to trade from. Yeah, so usually for this show, I will have already ranked them accordingly. So in this case, Pound and CAD, I'll be trading long, then dollar and Aussie, I'll be trying to trade short. Yeah, the Swiss, I'm also ranking it quite low. So yeah, we'll be trying to short Swiss if it sets up at the level. Yeah. Then Euro will be pretty similar situation to CAD, as in I'm still gunning it for it to go long. Yeah. But it has limited upside from here. Not really a lot of room to play. So in this sense, when I look at it, Pound and Euro, I know you are short Euro Pound, but to me, it might look as if it might be in a small range. Yeah, till it breaks any level. Yeah. Kiwi, no surprises here. This thing since 2 weeks back, it has been stuck within this range. So again, expecting price might just go up to this level and then get right back down again. Yeah. Now, yen is a major surprise that I had from last week. So yen actually broke through 95. I didn't really expect yen to do that. So once it does that, I'm like, wow. Actually, I have no idea what triggered it. Is it from the debate again? I'm not too sure. But anyway, since it has broke through this level, I won't be really touching yen. Yeah, till it comes back to 95. Then I'll see if there's a retest. Yeah, because that what happens in the past is that we can see 3 times it happened. I'm sorry, 2 times it happens. So it actually broke, and then once it breaks 95, it will just re-enter the range again. So it's multiple false break. So I'm not really having exactly high hopes that it will bounce off. So this pen for Japanese yen is pending to see what happens. So
Yeah,
Swiss,
it's a bit of wait to see there.
Yeah, so I think yen, being a safe haven currency, is quite sensitive to news for the time being. Yeah. Then for Swiss, it has really reached 111. Pretty nice number. So I do expect to actually go lower. Yeah, hence why I rank it third from the bottom. Pretty straightforward for this Swiss pair. DXY, I have to admit, I'm quite perplexed about the movement of DXY. Yeah, but technically speaking, price might just come back to the lower trend line, this descending trend line, and then get back down again. Yeah, but I have to admit that for DXY, I'm not exactly having good results with it. Yeah.
Okay.
And the last is Aussie will be really stuck within, to me, is stuck within this descending triangle. So price might just go up to the trend line and then get right back down to 70 level. Yeah, so that's why I'm pretty bearish about Aussie all the way. But bearing in mind that Monday, Tuesday, it might appreciate a bit before it get wet back down. Yeah. So overall, that's my view.
So you're bearish Aussie, are you?
Yes.
Okay. Yeah, because we've had, and that's what I like. Everybody's got an idea on which way it's going to go and how it's going to play out. Like I said, and Ash had really, really good advice for this coming week, with being end of month and small positions, and the week up to the election. What we've been used to seeing will possibly not just play out. It's just it's an unusual set of circumstances, and as Shukri's just added to the chat, he just said, yeah, trying to work out what's happening with the dollar index as well this week has also been a bit of a head scratcher.
I mean, this, to me, the current situation is not driven by technical or fundamental. It's really driven by sentiments, and sentiments can really change by the minute. So it's quite hard to catch.
Yeah, absolutely. Absolutely.
Right.
So yeah, like I said,
with that, I'm done. I guess I'll be handing back the screen to Ainslie.
Yeah, I will. Okay, let me just grab this. Okay. Gold. What can I say, guys? We're just going to check these. I've got a 4-hourly chart and a daily chart on your screen here at the moment, and can you just, we can see that, hopefully we can see that chart. That would be good. Whoops, and what have I done now?
Yep, we can see your charts.
You can see my chart? Great, thanks, Lloyd. Okay. One of the things I look for when I'm trading is, and being a trend trader, I look for and I'll just show you here over on the right-hand side, is my ADX, which shows the strength of the trend, which needs to be moving strongly upwards above 25. As you can see up here, and Alexis was very kind to blow it up for me on the screen, we've got my moving averages of 20, which is blue, 50, which is red, and the monthly pivot, flat as a tack. The ADX is below 25. The MACD is almost lifeless down there, showing absolutely no momentum. And gold has just been consolidating. It's been consolidating. It went through a major consolidation back here in August, in September, and then we had a little bit of a dip, and that's just come back up and back into the range and just going sideways again. What I am looking for, and if you go back to, and I know Shukri mentioned Ray's analysis that he has done on Markets Made Clear, Ray Gilmore's analysis, that gold normally consolidates or has a small pullback, and then what we look for is a following of the US Treasury bonds, 10-year Treasury bonds. There seems to be a high correlation between US T-bonds and gold prior to an election. So Ray had done an analysis on gold and T-bonds and expects gold to sell off. Now, we've been talking about that happening even with a seasonal bias to the short side for some time, but as you can all see, I'm getting very, very little in that regard at all. I've got nothing to trade here. I've got just a consolidation. It's going up. You can even see here on my 4-hourly chart, we had a bit of a run, and I thought, oh, here we go, we're off and running, and came in, hit this level of resistance, and just turned around and went straight back down again. It's really hard to trade unless you're a Geoff who loves these ranges, but for me, that's not what I'm looking for. So until I actually see a bit more of a pull up above 25, and that doesn't mean that reading this average directional index does not mean that because it goes above 25 that the financial asset that we're looking at is going to rally. It means the strength of that trend, whether it is a rally or a sell-off, is increasing in strength, and that's what we want. We want a bit of strength behind us, and the moving averages separating, and as they separate further, that also indicates the strength of trend. So that's been a really, really tricky scenario for it to play out this week, this month actually, and I'm really looking forward. I'm really looking forward to the elections getting out the way so that I can have some kind of direction. I believe I will start to see some kind of direction coming into, or even just after the election, regardless of who is going to go in. So that's one of, like I said, I've been sitting watching there, drumming my fingers on the table and not getting very fast at all. The next chart we've got is oil, which closed below $40 over the week. After it also has had, you can see it just, we had a poke down and then straight back up into this range. It really is struggling. It's being very sensitive with geopolitical news. We've had a few things that's actually happened during the week that have given us some really strong downward movements, and especially on Friday, there was a rig count on the US US rig count, and I know we haven't really spoken about it, but it's one of those indicators I look in the background, and it indicates future production. So with the rig count diminishing, production goes down, and with an expansion of number of rigs being open, you can expect oil to indicate that it's tending to expand production. But under the current circumstances, I think we can all just say, why would they do that? Unfortunately, the rig count has gone from the end of September from 180 rigs to up to 211 this week. And that would seem to indicate that some people are just not, some of the producers are just living in, let's call it wishful thinking, shall we? There's a bit of wishful thinking in that it should be hoping to just keep the balance, especially with that European lockdown that's happening as well. The other thing, and I'll just, if Lloyd, I just need to pull up some charts that Geoff has given me, and I'll just say on gold and oil, they are big weight seas. I am hoping that, by the way, with oil, that the OPEC really pull some of these producing nations in to line. They have been very hopeful with that, but we all saw what happened when there was a flooding of the market of production and demand was dropping off back in April. It was, as we all saw, it was pretty ugly. So for me, on gold and oil, I've got just major consolidation on the timeframes I look at, on the 4-hourly and the daily, and we'll just have to see. I think we're just going to have to wait until after the elections. But in his absence, Geoff, being the good man that he is, this is one of his 4-hourly. He is a bull on the Aussie dollar. He is right there with Alexis on her analysis of what she was saying further with what's been happening and how that's looking on a fundamental basis. What he's looking for is that, and I'll show you on the monthly chart. On the monthly chart, what's happened is the downward trend line, the major downward trend line has been broken and come back and retest this level at 70 cents. And back on the 4-hourly chart, we've closed at 71.33, and he's going, okay, we've broken, had the first breakout, come back and retested, and he's looking for a long.
Ainsley, you're still on the US oil chart.
Oh, okie dokes. How did that happen? Thank you. Okay, hang on.
Geoff does love this Aussie dollar, I have to tell you, Ainsley. He was on about it all week last week, the Aussie dollar. He's not going with anybody else. He likes it, and he was right actually. There was a bounce with the Aussie dollar in the end last week.
There was, right to the end of the week.
Yeah.
There was a bounce. So, okay, new share. Here we go. Honest to God,
is that Zoom for you?
I don't use it enough.
I can bring you a chart, but I don't have his analysis.
Oh,
he's got lines. Oh, there you go. Yeah.
How are we going? Is this looking like Geoff Pine's 4-hourly chart?
It certainly does.
This is good. Thank you for that. I was chatting away on my oil chart, but yeah. So I'll just pull up the monthly chart that he's provided, which is that downward trend. And you've probably, I mean, you work with him, Ash. You know, this see how it's going. He's loved this huge breakdown from, when was that? March. That looks like March, April. Bullish engulfing candle. We've had a really strong run up. The downward trend's been broken. It's been a retest. He likes this really strong level of 70 odd cents. And like I said, here he is looking for, we closed above at 71.33, broken, higher low, second higher low, and he's looking for that to continue.
And it's interesting, isn't it? Because it's another one of those that is election dependent. Because you'd imagine if Trump gets in, the Aussie may well continue to move to the upside. But Biden, if he does squeeze the indices somewhat, then the Aussie may well weaken a little bit. And also, I'll tell you what was quite interesting. I didn't hear your oil analysis, but the other thing that, I was looking for shorts in oil. I missed it. I was so annoyed with myself on Friday. I took my eyes off the screen and I missed a short in oil. But Biden could be really bad for oil as well. And I suspect that might well affect some of these commodity-based currencies. So the likes of the CAD and the Aussie, I might well be looking for some weakness if Biden gets in, and the adverse of that if Trump does.
Yeah, well, as Shukra gave us three outcomes of next week, and one was Biden gets in, or Trump gets in, or Trump loses and causes a problem.
Yeah, I hadn't considered that one actually, but yeah, that's a fair point actually, Shukri. He's not a man that goes down without a fight, is he?
No, option 3. Well, obviously you all got it wrong. You meant to vote for me. You meant to vote me back in. You just need to go back and think about it. So you can sort of see that going. But with oil, the problem with I wouldn't say the problem, but the outlook for oil with Biden's policy is that he wants oil to fossil fuels, oil, coal, all of that to be gone. He wants renewables to be more engaged. So he is looking at trying to phase that out, which is really interesting because that oil industry lobby is very powerful. You thought the rifle guys had a little bit of power? Well, sorry, their pockets are way deeper in their 10-gallon drums, 10-gallon hats, 10-gallon. So they're really, really powerful. And with oil and Biden, that's an interesting scenario and how that would be addressed. The other thing is, we just need to be really blooming practical with the fact that, I mean, that's a longer term scenario, but what with oil is that you got Europe shutting down. I mean, China is back on its feet, and the results out of China this last week gone they've been great. I wouldn't say the but they do show a strengthening of the economy. Unfortunately, we were just saying earlier, Ash, before you joined us, it was overshadowed with what's coming up with the US election and that sort of taken a back seat, except for the fact that it helps the Australian dollar in that regard.
And this is one of the reasons that I'm struggling to be anything but bullish on equities, because the numbers are not collapsing. Even though we're kind of going through this this terrible situation, as you quite rightly point out, China's still growing, and the United States isn't in any particular trouble, and nor's the UK. I mean, the UK didn't have great numbers last week, but they weren't under 50. Which is always our gauge, isn't it, of growth? So things aren't too bad, and it's surprising, but the numbers don't lie, and it's very, very difficult to go against them. So for that reason alone, taking away the election, for that reason alone, I can't help being relatively bullish on equities and potentially the Aussie because of it, I suppose. But obviously the election does change things. Brexit changes things, so there will be some speculation of people positioning themselves for a bit further down the line, 3 to 6 months out. But things aren't that bad. I haven't seen anything really hideous. Jobs numbers aren't great, but the stock market doesn't really care about jobs. I mean, what was that report recently about the robotics taking most people's jobs in the next 10 years? Are people that will the stock market care about people's jobs if they're going to be replaced by robots anyway?
I think it comes down also to retail and consumer spending and those other little things that sort of like tick the economy along. We do need those kind of things happen. But it becomes what evolves, how we evolve as a global economy, and we can't just say we're like we were back in the 70s. We're all just paddling our own canoe and hoping for the best. It is a global economy, and we're all part of that community. But what you're saying is robotics might be, but there's a small little thing called, consumer spending and keeping businesses alive and all the rest of it. So
you make a good point.
And it was interesting interesting. It is interesting that, you know, we saw one of the two things that have boosted China's exports this last quarter were the rising global demand for medical equipment and work from home technology.
Yeah.
So not necessarily robotics manufacturing in that regard. It's people working from home and still adapting to, hey, they're still working, still need that human touch.
Yeah.
So, yeah, which is interesting. But third, the other chart that, let me just see, let's pull up this next one. Okay, this is Geoff's EuroCAD.
Beyond my pay grade.
Any comments on that one, Ash? Was he talking about that?
Beyond my pay grade. EuroCAD, you know, the thing is, yeah, I kind of understand the euro, but that's obviously kind of like caught up in Brexit. The CAD is caught up in the oil scenario. So, you know, it's what that would be sort of danger versus danger to me. It's just like, which way do you go? Do you go with a Biden win probably weakens? Yeah. I mean, it's one of those things you sort of, let's say a Biden win is probably going to weaken. Yeah, but Biden win's probably going to weaken the CAD. A deal with Brexit is probably going to weaken the euro. So I don't know which way you go. I mean, this is probably the one of the better ones for actually expressing which way you think two separate elections are going to go. You know, it's, and that for that reason, it makes it very, very difficult for me to make any kind of comment on this. Yeah, Sweet's saying that the Geoff's been stalking the EuroCAD, sure, and I think he has. He likes this one, but personally, that would give me too many sweats at night.
He has been stalking,
going into. I couldn't trade it.
Yeah, look, he is looking at it from. I understand he's looking at it as going, I've got a double top here, and then I've got my lower low, my lower high, and my, you know. That's only just a lower low, by the way. It's almost a double bottom. And you know, if you look at that going straight across from here to here, and you know, I like to put neat horizontal lines on things rather than arbitrary trend lines. But I mean, that one speaks for itself. So he's looking at, you know, he's looking for that lower high to come back up and have a false breakout, retest the trend line, and then in his sell zone is here. That's what he's looking for. Now, whether it happens, you know, he's not saying jump on board and sell tomorrow. He's saying this is what he's looking for as a setup. The false breakout, coming back in, a retest of the trend line, and then he's looking for it to go short as well. But as he said, the fundamentals are just so hairy. It'd certainly make your armpits sweat, that's for sure. So yeah, that's an alternative. And his last one is
I'll be picking him up on all these tomorrow.
I'm sure he can't wait, Ash. I'm sure he can't wait. But I'm thinking here we've got a tribute to you here. We've got a potential right shoulder if that's what happens with an inverse head and shoulders. You're only off on him.
Do you know, funny enough, as soon as you brought that one up, I was like, yeah, that one speaks to me. What's that one?
That's Kiwi Yen.
Kiwi Yen, okay.
New Zealand.
Yeah,
New Zealand yen. So he's looking for it to come back down here to a very strong level of support. You know, it is here at the moment and is really stalling.
Yeah.
But for it to be better set up, he's going to be looking for something to come back under that trend line. 3 false breakouts. It's but whether that actually continues from there up, because we've hit another level of support just in here at that juncture where it was at the beginning, end of last week.
Yeah, to be honest, I mean the yen. I'd have very little confidence in the yen strengthening too much. So if that did come back down there, that does look like a good opportunity to me.
You know, it was funny. I was watching dollar yen the other day, and I looked at it in the morning, and it was 10. What was it? I can't remember. 105.64. And I came back about 10 hours later and it was 105.64. Like it hadn't gone anywhere.
Yeah.
It is still in that range. Like, oh,
I don't see, and this is I always think about, you know, which do you go to when you look at the protection, when you buy protection, and I would have thought the Swissy would be better, you know, on the whole. The yen, the Japanese economy is just, I don't really get it. You know, I know the philosophy of the yen being the safe haven, and I know why it's the safe haven. But the numbers are they're a horror show, you know, for Japan.
The Japanese economy is actually a basket case, and I think if you've listened to Julian long enough, he this is one of his hobby horses. Is he doesn't get why the dollar, why the yen is such a safe haven, because he said their economy is a basket case. They are not doing well, as he said. The numbers just don't speak. But I think it's one of those things. It's just been, it's always been like the Swissy is a safe haven. Yet dollar yen is a safe haven, and that's what, you know. And we're tied to the US dollar, and we're tied to the China's economy, and it as it goes, you know, and dollar CAD's tied to oil and all that kind of stuff. So I think it's just precedence rather than anything else.
Yeah, I agree, and it's one of those things that the market has a memory, and it seems to remember the oh, well, right, safe haven, let's go to the dollar yen. But it's like, well, that actually doesn't make any fundamental sense at all, apart from that. So I'd always go to the Swissy personally. I think the Swissy is just a much more solid currency. If I was buying protection, I'd be much more inclined to go to the Swissy than the yen. And I think they both you know, are quite good at that function. So yeah, if it came down, I would concur with Geoff's move here. I'd be looking for upside against the yen as well if it was on that right shoulder.
Yeah, and like I said, I mean, he's looking for scenarios to play out this week. He's not saying jump in on Monday morning. And this is a long or a short. He's just saying this is what he's looking at. He can see these technical setups happening, and that's his level of support, and he's just waiting. Okay, so Geoff, in his absence, I hope his charts justice there, and to say wait, and wait on EuroCAD, as we know he's been stalking that for a while. And the situation with it would just here with Kiwi yen, waiting for the scenario. He is a bull on Aussie dollar, and we'll just see how it all plays out. It's going to be a really interesting week, but got a lot to come, to get through for the end of the week. So, as you said, be really careful with position sizing and small positions, and take a position before. And if you think you're going to trade the news is things are happening just so quickly. Yeah, you're not going to jump in. It's going to be difficult if you hear the news or you look at something. It's going to be really hard to trade and be filled when you thought you were going to be filled as well.
Yeah.
So
I think you're right. I think timing this market is probably going to be harder than most times.
Yeah, I mean, I'm looking at my gold and my oil charts, and I'm just like, oh, look at, you know, probably have more fun stabbing my left hand with a blunt fork at the moment. As far as
do you know, totally agree. Totally agree. Do you know, I would really like to get gold and silver in my portfolio, but I can't justify it. I continue to not be able to justify it. And the concern is that this is it. This is as far as we come down. But I'm hoping we do drift down with gold and silver just a bit lower, so I can pick up a good price.
I'll put it out there for you, Ash. So Ash can get a good price. We'd like it to bound down to 1,700. I'll see what I can do with the gold gods.
Maybe you can sell some of yours. Maybe put some of yours in the market. That might help us.
But it is so sensitive to the election, and high correlation between 10-year Treasury bonds as well, US Treasury bonds. So we're just coming into that. I just want this next week out the way, so we can get a result and know, get a bit of direction as well. So that would be good. But I think that's it. But thank you, thanks for joining us, Ash, and thanks for your help here with the charts in Geoff's absence, and
Ainslie
and Shukri's
on Geoff's
Shukri
trade.
on the cryptos, Alexis on fundamentals, and thank you, Lloyd, on the currency indices. That's been really good. I hope everybody's got something out of it this week, and look forward to you joining us same times next week. It is the same
Fantastic.
time.
Well done, Ainslie. You've done a grand job.
Big shoes to fill.
You're a bit prettier than Paul.
Thanks. I'll take that one and I'll put that on my resume. Yeah, good one. Okay, everybody, thank you very much for joining us. I hope you've had a great time, and we'll see you next week. Bye for now.